I good? Yeah, okay, good. Okay, so I'd like to talk to you about StratMaker, which is a product, a KX product, really, in the digital asset space. So there will be, the first part of my talk will talk a little bit about cryptocurrency so we can understand the context of what we're trying to do. And hopefully then you'll understand a little bit more about the product. So when we talk about cryptocurrency and digital assets, the two words that I hear most often are blockchain and Bitcoin. If I say cryptocurrency, digital assets, those are the two words I hear. And the reality is that for the first 11 years, Bitcoin started on the 3rd of January 2009. Almost all of trading was dominated by the two coins, Bitcoin and Ethereum. They're slightly different, but these were the two coins that dominated cryptocurrency trading. Now, there are several reasons for that. One of them is that there was insufficient liquidity, there was insufficient historical data in the other coins, and there was insufficient knowledge about what are all these other coins. There are thousands of other coins, but there was a lack of information. However, thanks to the bull market that you saw in November 2020, in part to that, there was a greater adoption and consideration of other coins and cryptocurrency. So I define the period before 2020 to be an ETH Ethereum, which is the symbol for Ethereum, Bitcoin dominance, and after that began the age of diversification. To give you an indication of that, let's look at the table on the right. What we first see is that now, this is something that was, these are tables that I created last week. We have approximately 40 coins with market capitalizations greater than $1 billion. And we have almost 40 coins which trade in a 24-hour period at over $50 million. Now that's huge compared to what you normally think, oh, Bitcoin, Ethereum. Those are the two things. But and these two measures, the market capitalization and the trading volume, are important. Trading volume is important because of your liquidity to be able to get in and so that you don't affect the markets. But it's also important for your liquidity risk if you want to get out. The market capitalization is important as to how large a position you can take. So the larger the market capitalization, there's more room for you to invest. So the table on the right lists the top 12 non-stable coins by market cap. And we can see even number 12, which is Litecoin, which is a coin like Bitcoin. It's a store of value. We can see that the amount of volume that's being traded in 24 hours is $524 million. And it has a market cap well over $5 billion, which is pretty large. More excitingly as well, now we're also thinking about, when we talk about cryptocurrencies, there's the concept of sector diversification. Bitcoin is a store of value, and so we always thought of coins as stores of values, but now we can break down these cryptocurrencies into different sectors. All the way, I've written about 10 of them here, from layer 1, which involves Bitcoin, all the way down to layer 2 examples, which are like Arbitrum. So you can actually start thinking about cryptocurrency trading in terms of sectors. You can think about relationships, and you can break down their returns into these dependencies, things that we never could do when there was insufficient liquidity. There was not enough knowledge, and obviously, there was not enough historical data. Beyond just the coins proliferating and our knowledge about them proliferating and this ability to even break down and understand them in how you would trade equities, for example, you've also, from the trading perspective, have many more exchanges. So here's just a list of top 20 exchanges by notional trading volume. And all of them trade a significant amount of volume a day. So you have choices to trade. Now, this fragmentation is actually not a bad thing because as we know, there's still a lack of regulation amongst exchanges. So putting all your eggs into one basket is probably not the best thing to do, as some of us found out. So it's exciting. We have a lot more coins. We have a lot more equity-like trading opportunities. But it would be remiss of me not to talk about the debacle that was 2022, which was cryptocurrency and its terrible, horrible, no good, very bad year. You must have heard about, if you have kids, you probably know this from my reference. So let me tell you. Anyway, but we'd heard about Celsius, which is a crypto lending firm, Terra Luna, BlockFi, and of course, the mother of all debacles, FTX. And in between, you had a bunch of hacking issues, etc. So despite all of these horrible events that happened in 2022, we believe in the resilience of the space. And as I showed you most recently, we do still have significant opportunities for diversification and growth. So institutional trading in cryptocurrencies. We've heard from our previous two talks, most of cryptocurrency trading can be broken up into two areas. Centralized finance. When we think about centralized finance in cryptocurrency, we talk about these exchanges. People say Binance, Coinbase. That's really centralized finance where where the exchange has control of your wallet, for example. So we've got that space is dominated by market makers, XBTO being one, and short-term arbitrageurs, doing anything from strategies like inter-exchange arbitrage, latency arbitrage, or even crypto fiat and FX market type arbitrage. And you also have decentralized finance, which is trading on the blockchain. You have stakers, staking, yield farming, and liquidity mining. These are shorter term type strategies. What is not dominant, but you see in the equity markets, for example, are large, scalable, longer term, multi-coin, multi-asset type strategies. You don't really have that. And part of the reluctance for some of these type of strategies, there's a desire for it, is that there's just a lack of regulatory clarity. And if you took a vote amongst crypto fanatics or institutions that want to participate, they fear the regulatory climate. There is no clear regulation in the United States. There's a lot of humming and hawing as to what's going to happen. But, however, there is still hope. Hope because cryptocurrency extends beyond the United States, and there are other countries that are already taking lead. So, in anticipation of this demand for greater institutional, large-scale strategies, more longer-term outlooks, and I mean longer-term could be hours to a couple of days, 2 weeks, let's say, or even months if you so please. But in anticipation of that, as well as we have a sister firm where some of our clients have demanded the need for a product that can handle this. Anthill Investment Technologies, our firm, is building our maiden product, which is called StratMaker. Okay? So what is StratMaker? StratMaker is the all-in-one solution for transforming raw data to profitable investment strategies. Think about it like a strategy soup. In goes your raw ingredients or your raw data, and out comes successful investment strategies. Just like you open up your can of soup, good meal, right? Okay, more specifically, it's a full stack analytics platform and a strategy simulator. It takes all the raw data, you're able to create strategies, and actually sees performance. It's a software as a service, cloud-based product, and an R&D environment. Our design principles have been that it should be versatile, user-friendly, it can easily integrate into investment workflows, but most importantly, it should be the frictionless, efficient, and rapid way for a firm to explore the digital asset arena. So there are two ways. If a firm wants to enter the digital asset space, build large-scale scalable strategies, you could hire teams of developers, data scientists, deal with all the issues that many of the people that we have spoken with deal with on a day-to-day basis, or you could subscribe to StratMaker. So it also helps enhance collaboration because of the way we've structured it, But it's also suitable for many multi-manager firms where you could have multiple instances of StratMaker where each team is isolated from the other and they can develop their strategies and seed success. So let's talk about some of the key features of StratMaker. Start with the foundations, data. So StratMaker provides us with high-quality, research-ready market data. This is not something that you can get off the shelf because some of the challenges that you face, especially in the digital asset space, is that the data is not normalized and is dependent on its various sources. We have an interface, a visualization for our data, the quality that is shown in real time, and the data that we provide includes exchange data, which is based on spot markets, spot cryptocurrency markets, perpetual markets, which is a perpetual future, for those who are not aware, is a tool or an instrument which is used to short securities. You can't short a coin as it is. You used a perpetual swap. So, and the third, we also have futures data. We will eventually include options data. We also include in this data blockchain data, which is also important in strategy creation. We have a visualization for market statistics. Basically, we have a dashboard with the heat maps and real-time charts. It's extremely important for us to know what the state of the market now is and historically. We have a graphical interface for price and volume forecasting with pull-down menus so that you can create your own factors and prices, and I'll talk about some of the use cases later. We have risk models, and these are built-in risk models for people who want to assess the risk of your portfolio, or you can also use the tools to create your own risk model. So both features are there. So if you want to start off with something that's already there, right off the bat, you could do that. The other part that is critical for portfolio management is our transaction costs and trade execution. So we have built-in trade execution models that users can avail themselves of. And we have a strategy simulator where you have a visualization where we can see the performance metrics and the charts, both historically and in real time. For more sophisticated users or people who want to create sophisticated execution, investment strategies, sophisticated signals or factors, you have the Python API. And of course, shout out to KX, everything is built off of KX. So a couple of just quick technical notes. Okay, so yeah, kind of the technical notes. Everything is built off of the KDB+, which is our foundation. We've got PyKX and Embed Pi for working in opposite directions. PyKX for the customization. Embed Pi for us to use some of the tools that are more easily available on Embed Pi, optimizers, for example. KX dashboard serves as our visualization. We have an optimization suite, which is critical. Typically, you'd have to either go buy something, where we offer that directly. And these are complex portfolio optimizers. And of course, the cloud infrastructure where everything sits on. So let's talk about some of the use cases. So what can we use StratMaker for? Step one, you could use it to create factors, analyze, compare what are the factors that affect returns within the cryptocurrency space. You can use that using our signal lab, as we call it, and I'll give you an example of that. You can then try to combine these factors to see how predictive they are for price returns, volume returns, and the tools that we offer include state-of-the-art machine learning, but also less sophisticated statistical techniques. You can understand correlations also between the cryptocurrencies, and this is important also for understanding the correlations between the cryptocurrency markets. And since we have data from the traditional finance space and some of the ETFs, to understand its relationship with equity markets, commodity markets, for example, or FX markets. You could use it for trade execution because StratMaker, thanks to the dashboards that we provide and the real data, and being execution guys ourselves, historically, you can understand where best to place orders, where can you find the best liquidity, not just if you have a small order versus a large order, how quickly can it execute and how much it would cost to execute. So you could use StratMaker to be able to do that because of our real-time market statistics page. You can use it to build risk models for those interested in building risk models, or you can just assess the overall portfolio risk because these are things that currently are not, you may think that this may be bread and butter in the traditional finance space, but it's not really there at the moment. People do build it individually, but really there is no industry solution for this. And there's not really been a need for that, but we anticipate that there will be one. Obviously, you can use StratMaker to create strategies. Use the signals, the factors, the risk models, the execution models, and put it all together to create an investment strategy, hence StratMaker. And you can look at its performance running back just historically, make a small change, add a new factor, change your universe, and within minutes, you'll be able to see historically how it would behave and watch its performance in real time. Break it down by understanding how each factor operates and what the contribution is. Pull it down, take a look. You can also use it in live trading beyond just saying, okay, look, I want to see what the effect of certain changes are. Every day, if you want to rebalance your portfolios, plug it in as your initial input, or periodically intraday as well, because we do have real-time data. You're able to and then see it should give you what, based on your investment strategy, it should give you your desired positions. And last but not least, you could use it to derive market insights. Many of the analytics papers that you can read about, how does the crypto market interact with the macro market? What are these effects? What's the breakdown? What's the correlation? What's the cross-correlation? What happens if I orthogonalize it against one behavior? So you could do all of that with StratMaker. So just to give you, here's just one use case example where we are trying to use it for daily portfolio rebalancing. We have market reference, on-chain data, also blockchain data, but I put in there. That's on-chain. That is all fed into our StratMaker in the cloud process, which we run. And each user can interact, has a private instance. So if you're a large institution with multiple portfolio managers and say it's a multi-manager institution, each one would have an instance. And they can interact with it via the GUI, which is the first step. Or you could, if you want to be much more sophisticated and very proprietary about your signals, et cetera, proprietary only because it's very complicated, you could use the Python API, which, of course, thanks to PyKX, is much easier. The positions that we get, they give you strategy target positions, and these are then submitted to the order execution and the broker exchanges. Mind you, the OMS and the EMS, the actual execution and the actual trading, for example, where two previous speakers have talked about, we do not build. And that's been a real choice by ourselves. It is an area we're comfortable with doing, but we made that choice very critically, first and foremost because we're a small team. Secondly, because that is fraught with risk from the regulatory aspect. We cannot take on that risk. It's really far too much for us. What we are producing is global. It's used by, and really not under doesn't hit any regulatory boundaries or raise red flags. It's very important for us to be able to do that right now. So here's an early version of our one of the pages that we have. This is the strategy performance visualization. As you can see, it is, for those of you who use KX dashboards, it has similarities to that. We can see tabs for our signal lab, for portfolio constructions. And this is a simulation of a certain strategy. Here's a strategy with three coins. The 3 coins are Bitcoin, Ethereum, and ADA, which goes by the name Cardano. ADA is just a symbol. The start date, the end date, we see our historical performance, certain metrics, and we can see the live performance. We can change these using our drop-down menus, recalibrates everything, and then you can see the performance in minutes. So, of course, we're a young firm, and there are growing pains. Okay? So to be clear, so some of the growing pains we are facing right now, and some of them we anticipate. So data challenges, I've talked a lot about that. That involves dealing with the streaming data coming from the exchanges and some of our data vendors. The consistency of that, the breaks in that, it's notoriously difficult. 2 of our previous speakers have alluded to some of the challenges. I feel their pain. We feel our pain. Secondly, the second issue is that a lot of the data, unlike in the equity or the FX space, for example, where we worked in, really there's no real regulation. There's no SIP processor. There's none of that. Everyone does what they want in some sense. So there can be differences in resolution. There could be trades that never existed. So it's very, very important for us to spend time to have clean, organized, normalized data. To tell you, I challenge anyone here to give me the 24-hour volume in Bitcoin yesterday. And I can tell you, you will come up with 10 different answers on 10 different websites right now. And everyone has their own favorite technique, and I have no idea. And some people say, well, I see the volume, and I'll take 50% of this because we think that this exchange tends to inflate its volume. I'm like, why 50%? Why not 43%? There's no reason, but it's like kind of. So it's really hard stuff. So for us, people still get away with that at this point of time because the inefficiencies in the cryptocurrency market are so big that you can be sloppy. But that's a bad way to work. Okay, so it's sloppy, so we don't have to look after, we don't have to care so much about data. But having been in the equity stat arb space, having been portfolio managers where we're looking at basis points per trade profit, with execution being about half of that, the quality of the data is so critical. And really, we're a pain in the neck to some of our data vendors because we call them all the time, asking them so many questions and pushing the limit. But so data challenges is a huge, huge part of what our challenges are. A lot of it is because of the volume of data, we need to optimize KDB. We're confident we'll get there. We've got to adapt KX dashboards for the use of StratMaker. The volume of data that goes into KX dashboards, and for us to be able to do that, is quite large, and the frequency of updating, et cetera, and the resolution of our data. So that has been a challenge, but we'll get there too. And of course, we anticipate that we'll have to deal with scaling issues, network traffic, et cetera, and lastly, data security. But these are all things that some of the challenges we're facing right now, and some we anticipate. But all this time, we're taking a step-by-step process. But our ambitions are not, let's build this product and see how it goes. We're thinking ahead. So everything is strategically designed, and so that its functionality can be eventually extended. We don't want this to be a one-and-done show. So where can we go beyond? What lies beyond our rainbow, so to speak? We're talking very much about cryptocurrency trading strategies in the equity sense, but we will eventually be able to start designing strategies in the DeFi sense, optimal yield farming strategies, optimal staking strategies, optimal liquidity mining strategies. We could also think, at this point, as I mentioned, we've stayed away from the order management system and the execution management system process. But at some point, when there's a lot of regulatory clarity, et cetera, we could build a full pipeline. The third area that we could eventually grow is thinking about TradFi and crypto. Why do we have to treat them as separate classes? Ultimately, they can treat them all together and think about a portfolio that has both cryptocurrency and TradFi in it, FX markets, equities, et cetera, and be able to balance them all. Why don't we create a mega Uber strategy, so to speak? we can do that. And lastly, even the most tantalizing thing above all of this is that if we create, using our tools, a set of key portfolios that wealth managers could use, they've got their own basic instance where they can pull down 3 or 4 options for them, pre-built portfolios that they could easily see the performance for their clients and sell them on 1, 2, or 3. It could be the tool of choice for every wealth manager that's out there that wants to have their clients trading cryptocurrency. And they could also play with that. So at this point, none of this work that has been done and going forward would ever be would be possible without our partners, KX and AWS, and our very small but cohesive. Whoops! I thought I had another slide. What the hell? That was the best slide of all, by the way. Damn it. Anyway, okay. Thanks. I'm 1 slide short.
Is there a question? Aaron, question?
Yeah. So I'm naive when it comes to crypto.
Yeah, absolutely.
On the slide which had FTX, that obviously that was one of the, but then you mentioned hacking issues in 2022, and I thought the whole point of this all being on blockchain is that it couldn't.
Oh, no. Oh, no. Hacking occurs all the time. Oh, hacking, because so for example, here's a simple example. You could have, in the space, if you have, let's consider there is, in the process of DeFi or on the blockchain, there are certain exchanges or automated market makers processes. And what people do is that they place their tokens on there in a way for providing liquidity. So let's say I have all my US dollars and I just put this in a bank and I'm just converting it to cryptocurrency, to traditional finance, so to speak, or something that it would be more comfortable with. And I put it in this bank, and then the bank is able to start, letting people borrow it, etc. And for borrowing it, I get some money out of the interest. If someone hacked into this protocol, because these are all run on a concept called smart contracts. So what is a smart contract? And I'm getting a little bit in the weeds here, but just so that you understand that. Okay? A smart contract is just a piece of code. Okay, just think about it. It's just a piece of code where people can all jump in, and the love, question, whatever. People jump right in and can change the code. They have choices of what kind of changes they want to make to this piece of code that runs automatically. But that has control over all these coins that you've put in there that you're farming for interest. So let's say someone else wants to come and use this to borrow Bitcoin to start trading. So you're getting interest. If someone hacks into that code, then they are capable of actually recognizing where those coins are and taking those coins for themselves. So those things do happen, and it has happened quite a lot. So it's very, very important so that happens, and, what's the game?
And then see the result of the hacking on blockchain, though, right?
Yeah, absolutely.
So you can be like, oh, look, here's this token. It's clearly hacked, but then you can't give it back to the person.
Well, so there are white hacker the terms, but yes, you have to. It's a pro. There are ways of doing that happened. To be honest, in 2017, that's called the DAO, or the DAO, which is, it got hacked, and then someone had to re-hack the hacker. So to get the money back, they were able to get, I don't know whether I quote my numbers right, but maybe 50% of the money back. And so yes, indeed it can happen. Yes, absolutely. It is dangerous, and you have to be careful, and it's a risk, right? It's definitely a risk. I mean, the decentralized finance ecosystem has multiple vulnerabilities. One of them is the security vulnerabilities, yes. And so, there's challenges there, no doubt about it. There are also challenges because there's lots of volatility, and the price differentials between what you see at the centralized finance space and what you see on the decentralized space. So Yeah, there are challenges. I mean, it's not painless, please. And let's be clear. I mean, this is a risky venture. We dream of great returns, and many people and many firms that I work with, they see only the top line return numbers, but they must understand, no free lunches, guys. But hopefully with our product, here's my shout out. So here's with our product, we'll understand the risks better. We'll be able to measure and evaluate those risks. How we're going to measure hacking risk and all that, that's going to be a huge challenge, but that's not our first goal. But eventually we need to be able to do that. Yeah, absolutely. But yes, it's a risky venture. This doesn't make it riskless. Our job is not to, I wish I could, but hey,